Hey, Frank. Yo, what's up, man? What happened to the market this week? Everybody's been buying. Everybody's on a buying spree. Who would have thought? So let's start with something that I went over last video, which is this wedge pattern we're looking at right on this chart, right here, this one right here. So I drew this wedge with this bottom support line because price came up. There was this pivot point here connecting to this one here, to this one here, and to this one here. So we were connected 1, 2, 3, 4 different spots. That was the reasonable support trend line that I went over. And then to the top, to the upside, it was this one connected to this one right here. Now, in the last video, this price action did not exist. And what I explained was that if price comes down and hits this, we could see a little bit of a bounce, but if it breaks through and then starts selling a little bit, we could see more downside. And then conversely, if it breaks up, which it did do to the upside and continues to buy, we could see more upside. So could we see more upside? Yeah. We could see more upside. There's gas left in the tank. How much more upside? Well, I have some ideas. Of course, nothing is set in stone. I don't have a crystal ball. I have some ideas I'm going to share with you in a moment. But before I do, I want to share something else that I found today that I thought was fascinating. And it's this. And you're probably thinking, what am I looking at now? Okay, so this is what is known as a logarithmic chart. Why am I using a logarithmic chart? Because if you look at this chart here, I have dates going back to 1877, right? So back here, I mean, we're talking 19th century, okay? And in order to calculate these trend lines, I had to use a logarithmic chart, which it doesn't use point to point like a normal chart does. It uses percentages. And why I use a log chart, because I'll show you. If I don't, it looks like this. So you just see flat price action, right? And it makes it much easier to calculate longer time frames, like, you know, in the decades, right? Now this chart is a 6-month chart. So every candle on this chart is 6 months of time. The first thing I wanted to show you, which I thought was fascinating, and this is, I'm showing you this because I'm showing you how trend lines are powerful, even over long periods of time. So back here, you can see the lowest part of the chart. This was back in January of 1877. Okay, apparently there was some stock market crash back then. I think it had something to do with the railroads. I don't know a whole lot about it, but we had a crash back then. So I connected this here to the roaring 20s, the high of the stock market. We had this big old bubble back then. Sound familiar? And then I connected this to this. And if you continue on in time, what you'll see, and I thought this was really interesting, if you continue, now I want you to keep an eye on this candle right here, right? Keep an eye on this one. Don't get your eyes off it. Keep your eyes on that candle. Keep your eyes on it. Look at that. This is January 2020. So this is, you know, COVID low. And look at that. Look at the bottom of that candle right here. I'm going to move away. You can see it. Look at right at that trend line. So we had a trend line going from 1877 to the high of the stock market in 1929. And if you followed that trend line, you would have been able to find support for the January 2020 low. I mean, that's pretty nutty. So I thought that was very interesting, meaning if you had this trend line on, if you had the wherewithal to have that on there, and you're sitting around in 2019 and you're thinking, where would a really good retracement be? Well, here you go. There it is. Now, the other line I have is from the high of 1929 connected to the .com high here. And why I have that on there is you can see price has broken out above it. So price hit it. It looks like at one point it even hit it and then retraced, right? So it was at one point resistance back in 2025. Price came up and hit it and retraced it. And then finally it broke through, and then now we're above. Okay, so back to the other chart here. So this wedge has broken out. It's like the toothpaste that's been squeezed. It's been squeezed to the upside. And I'm going to get rid of this for simplicity's sake. Now, where could this go, right? I find that calling tops is much more difficult than calling retracements. Retracements, for some reason, are not, foolproof or, necessarily, 100% accurate, but they're just a little bit easier to calculate than tops, right? If you have a trend line and it hasn't hit there yet, then it makes it a little bit easier to consider, but I don't have any. So what I'm going to do is I'm going to look for something else, right? And then so what I also want to do here is I want to take a look at this RSI, and let's make this a little brighter so it's easier to see. Okay, so now let's just take stock of what we got going on here. So I'm going to move back a little bit here. Okay, so RSI in the daily down here, you can see it's 66.49. So it's a little up there, but it's nothing too crazy. I mean, honestly, I think there's a little bit of gas left in the tank, right? I mean, if it were at 80, 85, I'd be like, oh, we might be a bit overbought, but looks like there's a little bit more gas left in the tank. So what I'm going to do is I'm going to use a tool that I don't think I've used yet on one of these videos. It's called the parallel channel. And you can find it here. I'm going to put that on, and I'm going to connect this low here to this one here, and I'm going to scooch that up to here, right? So I'm connecting this low to this low here, and then I'm going up to this high. Now, what I'm going to do is I'm going to extend this out into time, right? And then when you do these parallel channels, sometimes you have to finagle it back into your levels that you had when you initially put on there. And then, so now I want to also explain something here. So this bottom line is considered support. Top line is considered resistance. Also, this midline here, this dotted line, that's a thing. That's a level. And as you can see, at some point it came up, didn't quite hit this top level, and then came back in and teased this middle line here. And it looked like here it actually hit it and then came up above, hit it, maybe kind of teased it and then broke down. Now we're above it again. So what I'm thinking is right around up here, so let's say 8,070, maybe around 8,100, this could be resistance again, okay? So especially if we have RSI, if you're watching the RSI and you see RSI levels at like 80 to 85 up there, and then the price is up here at this top line, that could be a sign to sell. I'm also going to put something else on, the all chart patterns. I'm going to turn that on to see if we see anything. And I don't see anything on the daily time frame, so I'm going to move back one time frame to the 4 hour. And there you go, right? Look at this. The auto indicator put on this indicator, it put on a triangle, and look at that. It even honored this here, the midline here that I talked about. It honored that. And then it put the target here at 8,090. Okay, so anywhere between 8,070 to 8,090, that could be our next bit of resistance up there. And so I would find that probably pretty reasonable. So let's see what happens. I mean, this was a bit of a surprise to me. I thought we might see more downside before this happened, but here we are. We're on the road to possibly more upside. And then let's take this off a little bit here. And then again, if we're looking for a retracement, right? And we want to look at something here. So we'll put the daily time back on there. And then you can see, I mean, even if we're looking at this trend here, if we try maybe a Fibonacci, right? We can move from there to there, right? So, 618 around 7,500 or so, 7,498 could be a level right there to watch out for. Maybe down here at the 786. So I tend to like more data. This would only be 1, 2, 3, 4, 5 days. I'd probably want to kind of maybe have a bigger move, like something like this possibly, right? That would be a little bit more like from this low to this high here. So If we come in, this 236 could be a level. We could get a minor bounce off that. 382 down here at 72.29, 05, 70, 55, 618, 68.81, and then finally the 786. Any of these could be possible levels, but I would recommend that if you're considering any of these for the retracement, that you use them with other indicators for confluence. I wouldn't use these just on their own. Have other indicators that corroborate these levels for you before you consider. Again, this is not financial advice. I'm not your financial advisor. These are just levels that I'm seeing on a chart. And good luck. I hope this was helpful, and I'll see you next time. Bye.